Good morning. Sorry about the big shadow today. It is once again very, very nice. The lake is glistening. So, new week, right? New opportunities. A couple things I want to touch on here quickly. The Globex session kind of did what would be expected, right? We talked on Friday about this 40 area as being an area to monitor for a reversal or not so much a reversal, but a bounce in the market. You got to that 40 area, late in the session on Friday in the maintenance period and O period, right? One of my trades that I talk about quite often in the market profile series is, when you get a prominent point of control like this, like we had on Friday. So prominent point of control is more than half the day traded in the similar area. We had a 13 wide point of control, which is a naturally perfect point of control, right? It's showing absolute balance in the market. When the market, or if the market trades away from that location, a trade I like to take is called a Globex fade. Now, you take the Globex fade on an options trade, but you can take that options trade, on fairly short time frame, expiries. So I took it on Wednesday expiries, and the reason for that is odds greatly favor if you trade away from a prominent point of control like this. I don't care about your levels or anything. You could be outside levels. If you trade away from a prominent point of control like that, the odds greatly favor a return to that level. And you got that return, in the Globex session here now, and you're back inside Friday's value range, right? So as I'm coming into today, I know I'll have that trade I can play with. I also, want to monitor Friday's low. So Friday had what would be called a spike to the downside, where a spike is simply just a late day move, right? Late day move away from the value area of the market. And more importantly than what the spike is, I'm more interested in the low of what that spike represents, the spike base, which spike base is generally the strongest support on the downside. For right now, we'd be on the downside, the upside of the spike base. So we'll be looking at it as support. Likewise, if we were opening below, we'd be looking at it as resistance. So naturally, if we open within this range, I want to try my best to stay long, as the market pushes towards this spike base. Now, one thing that you'll notice as well is the STUV, the K and L periods from Globex. The highs all pretty much come from the same type of area. That would kind of be where I want to build my trade against. So if the market can hold that area, which is going to be your 52, 53, somewhere in that range, 50 to 53, somewhere in that range. If the market can effectively hold that area, there's no reason for me to exit that trade. And I should stay on that type of bias as far as looking for more of a upside rotational type day, rather than continued selling. Especially, if you listened last week when we were going over this stuff, the 21-day moving average and the 50-day moving average have worked as support, right? You get below the 21, people get excited, they start selling at poor prices. Next thing you know, the jam job comes and they all get blown out. So I've been on that side of the fence before. I'm a stickler for not getting too married to any kind of short side trade below the 21 moving average. And likewise, the 50 has worked, effectively as support for quite some time. Now, does that mean we haven't looked below the 50? Well, of course we have. But each time that we come into the 50, selling disappears. We tend to really fail on the sell side, and the buyers step in at really what is a very visual type of support level. So one other thing that I'm looking at as we come in, we talked about on Friday, usually Friday or Thursday, one of those days, talked about looking for the weakness in the market, right? So we discussed the fact that there's poor highs starting to build out. So for instance, on the 15th, you had the JKM high, very poor high. You had multiple poor highs in the Globex session. You then had poor highs in B, D, and E in the following on the 16th, and then G, H, L, M, so on and so forth, right? Coming into another Globex session with more poor references, and then of course Thursday session where you had even more poor references start to build. And I had mentioned when I start to see that many poor references build to the upside, it's really favoring If this Globex starts to look like this, you start to get a lot of poor references on the high. That is a fade, 90% of the time, because what it's effectively showing you is the buyers are really running out of steam. There's so much so that sellers are selling it from very exacting levels and doing a pretty good job at stopping any kind of rally. But that being said, okay, there's two ways of reading this context. This context was built from both the daily profiles, the fact that we spent our time, a lot of time in the same area, not getting anything, which, clearly showed that the buyers were on the weak side of thing. And then you start to get these poor references building. Now, those poor references work in two ways, right? The shortest time frame, the odds favored a directional move away from those poor references, because what it was showing is the buyers just didn't have the juice to push us higher. As we come down here now and we get this liquidation, you start to look at this, or I start to look at this like, although yes, the buyers are struggling, this is going to eventually show me that the sellers have gotten themselves, carried away. And as soon as this starts to go, you have to look for the completion or repair of these auctions to the upside, which will then, push the market higher, and could do so aggressively, because although this is showing a lot of weakness on the buy side in the shortest time frame, we got that break, we got that liquidation. You have to carry that forward, that the selling is weak in itself, and it's not really strong money pushing this market lower. So in the back of my mind, I am looking for some sort of bounce today, as long as, like I said, we can hold, 50, 53 area in today's market. I would think that the potential for us to at least move back to 84, 88, and then back up to that 03, 06 area is greatly increasing. And the odds are starting to stack up in the buyer's favors. But more importantly, those weak references and the fact that the market has sold off on, relatively weak volume with very mechanical levels tells me that, I should effectively not be too short bias. Add that into, being below the 21-day, being below the 50. Listen, the market doesn't have a catalyst to just blow away. I know. Inflation. We have a catalyst. Yeah, you don't have to scream it at me. I understand. Inflation doesn't matter while the Fed is still doing what they're doing, though. Plain and simple. As long as the Fed keeps printing, there's no reason to think the market can't keep grinding higher. Now, the backside of that, we are failing again as of right now. 68.72, another level I had. This is where buyers have gotten themselves in trouble. This is where they've been able to get stopped and absorbed. And you're seeing that, late here in the Globex session. And the potential for a liquidation event is there. So the potential for a counter auction, at least into the M period, again, down towards that 50, 53 area, those odds are there. So today, OPEX was, your quad witch was Friday. Usually the Monday after is just as tricky to trade and just as tricky on the tape. So be cautious, be aware. The fact that you should get higher than average futures volume today as hedges start to peel off. So today could be a tricky one as well. Again, most important aspect of day trading is you don't have to trade every day. Just because you're sitting here doesn't mean you have to click a button. We're here to effectively make money, not have a good time or gamble. This is a business, treated as such, and you'll find yourself with quite a bit of success. So that's where I'm at coming into today. I really want to hang my hat on 50 to 53 as being downside support early on. If we do make a push towards 84, 88, obviously I have levels in place that I'm going to be monitoring for potential resistance. Likewise, I think we're opening right up, or we could potentially open right up in Friday's value and do a lot of chop early on as those hedges do come off and volume does start to pour in on the future side. Globex fade, it's going to work out. I would think no matter what, it's going to be a pretty good trade. With that being said, if you're interested in joining, our trading community, check out the website, TradeUpTradingRoom.com. There's different options for you there if it's something that interests you, or just reach out to me, in direct message on one of the socials, or comment on the YouTube. With that being said, have a great day. Make sure you follow your plan, trade your plan, don't trade outside of it, and you'll have a good day.